So, Shavi FSO. Now, we have seen today rally and yesterday rally, and the most important thing we want to see is how our structure is being respected. And if there are mistakes, then we look for opportunity to correct them. Now we have seen the price action from October. I want to focus on October price action. October had a very good sell off. Why is October important in trading the yellow metal? We are trying to investigate. We are conducting a forensic. Why did we have so much sell off since October? We've not enjoyed this kind of bearish drop. What happened? Something must have led to this sell off after price updating a new all time high. What does that mean? Now that price have updated a new all time high, is it possible that sellers will come in again and crash the price in a similar way they have done last year? What is the possibility? At what area will this sell sentiment creep in again and make it a massive drop off of the yellow metal? We are looking at the chart to see if we can find a reason to this drop off in price. You know, a lot of times institutions they watch each other and they take similar price action. They take action at the same time. And that is the only reason you will see price dropping without any support. And I am placing special emphasis on this level and also using it as a litmus test. I have checked this up on 1 hour 30 minutes. Ladies and gentlemen, today's sell is not a manipulation. The market continued to buy until it pushed into a break of structure. A broken structure from last year October price action was what sold today market. Now, it is also important for us to see what price have done after a break of structure from this level. First, price updated here as a supply roof. Break of a supply roof returns here as a demand floor. Another return to a demand floor and break of a demand floor, turning it to a supply roof, and it returns back. There is a probability that market open, we could continue to see bearish drop. One case scenario, that is case one. May I tell you that everything in life is probability. The probability you will lose your job is there. The probability you will lose your money is there. There's probability in everything. Trading is 60% probability, 40% fundamental. Today we have fundamental data print coming in below expectation, and the market has driven itself up and down. But we are not perturbed, we are not disturbed by that behavior. Now, I've sent this chart on countless times. If you check my chart, I've sent this chart more than 2 times. And this is the last time I will discuss this. This is a price action that I've held price today at 2,815. There is a possibility that market may tap into this zone again at, let us say, 2,824, 2,826, 28. That was my anticipated sell zone before a drastic drop in price. But however, this key level holds a very strong price action. This is 4 hours close. This is 4 hours close, break and retest. The price action at this level means if we have price buying, break above this line, return here, price will uptick, pushing gold to almost 3,000 mark. This is a different zone. So when price returns into this zone, it will most likely give us a push into 2886, 886, $2,890 per ounce of gold. So now buyers are testing the supply roof. They are building up momentum. The sentiment is gearing up. The liquidity is pumping. If they manage to break this structure, it will ultimately set a new price for gold in the world market. They may decide to peg this price and begin to trade higher highs. So for those who have placed position at 2006 hoping that price will come back, better close your trade. Better close your trade. It might not come back. So trade price action and don't believe that a trade that have left you will come back for you. Whatever that have left you. If it comes back and you like it, you go with it. If you don't like it, you forget it. So you see, now price have tapped into that level. This area is very important to me. I want to put bubbles, cycle bubbles on it. It's important to me. And I keep my eyes fixed on this level. Three key levels that have made this ascending trend line a unique structure. I want to clone it and see. I want to check the price action from what we have in previous data. What can I get from this structure? Does it represent anything useful in the current time frame of SAU USD? That will give me a clue if the trend line is valid or not. This is a valid trend line. It is valid in the sense that after cloning this structure meticulously, it gave me a very sweet price action to hold on to after price updating here as a supply roof, updating here again as a supply roof, return to retest this area again as a supply roof, break of structure price returns, indicating that where price is now, there is a probability Sydney open market will continue to uptrend. Now, it might be in a form of consolidation where we are going to use this as our roof and this is our floor. So it might really not be something serious next week. So we'll have here as our demand floor and up as our supply roof. As the week opens, market participants might decide to consolidate, might continue to play up and down. This is our supply roof. Now, a breakout from any of this structure will further give us a clear directional bias as to where the yellow metal is headed. Now you see we have a supply roof and a demand floor, 4 hours time frame. Ladies and gentlemen, stick to 4 hours time frame. Trading 4 hours time frame will save you a whole lot of stress, will give you opportunity to make good profits. Just like trading daily candle will also help you stay profitable. You see this structure after price broke out from this structure on Thursday. You had a clear breakout from the structure on Thursday and price return on Friday after few consolidation. Market moved from 2,800 level and pumped into 2,815.9 where it met a strong supply roof, a previous demand floor. Our strategy is demand and supply, where we bring in a specially formulated in-house strategy that gives you sniper entry. It gives us the ability to predict price movements, areas of buy, areas of sell, before price approaches those zones. Go check our post. We never delete posts. Even if it didn't come to pass, I don't want to delete it. They are all for reference. They are for educational purpose. So this becomes a solid roof in the future. After seeing what price have done today, affirming that roof, the affirmation of that roof becomes my new litmus test, where I will watch this roof to see in the future when yellow metal buyers taps into this zone, I know exactly what to do. When they return to this zone, I will hold a sell objective. My bias on this roof remains supply. On this roof, if you have gold return here, sell your gold. If you don't sell your gold is going to drop money in your hand. Just like I announced last time about this break of structure on 4 hours. Look at the structure, breakout on 4 hours, followed by a potential retest. In the future, it remains a valid buy floor for me. If price returns here in the future, I hold a strong bias for buy at this level. I mentioned this structure for a very long time. After a breakout of that structure, we hold that buy to ransom. That buy has never been closed. We hold it while we continue to see what market is doing, believing that nothing uptrends forever, price will definitely come down. So if we have a push down into this zone, that would be a good time to look for buy opportunity at this level. If you have price return into this level, feel free. You want to buy gold at this level. It's already a high, but gold is in high demand. So on this level, feel free to buy. Will price return to this level? Nobody can tell. But if price comes to that level, it will be backed on a double confluence where we'll have two ascending trend line. You see the ascending trend line at this level. 4 hours close body of a candle providing a support structure and also fueling our impetus that at this level gold price may be eligible for a buy. So if price returns to this level, feel free, you want to buy. And if it coincides with a descending trend line, it will be for a while. I'm estimating a touch into this zone based on the breakout of this structure. If it happens in the month of February, it will be a good time to buy gold. So if you see this structure on 4 hours, hold it responsible. It might be coming to this zone where we'll have a double confluence, where a descending trend line meets an ascending trend line, giving us a higher probability for buy. So the structure of the market is well set out, and I'm changing the color to black, making it a potential buy floor. If you are in doubt, these are liquidity sweep zone where price return here on demand, return here on demand, return here again on demand, and finally price uptick, creating an ascending trend line from that zone. And we want to see a breakout from that ascending trend line. A breakout from that ascending trend line will be an invalidation of uptrend setup. So if that happens, I will want to come in and take necessary action. At this level, I want to hold the body of the candle responsible, hoping that I will find the breakout of the body of a 4 hours candle. If that ever happens in this case, I will change my bias from buy to sell. So this is the trend. Go practice it. If price returns to this trend line, depending on the force, depending on the impulse, on return to the ascending trend line. If it's coming here on fundamental data print, run away. Do not enter a buy here because the market has already built a buy liquidity. The market started building buy liquidity from this level where it started creating higher high, higher low, 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 a new higher high, and it might definitely come here on break of structure and continue to sell down and come to this area. This is case two. This is case two. I mentioned case one. Case one is price respecting this structure, returning here because this area is a valid demand floor. So I want to change the color. So if price returns to this blue line, it's an opportunity, but a breakout from that area means that price want to return in a similar fashion that price have respected a break of structure at this level, a break of structure at this level, a break of structure at this level. So if it breaks out and return, trade below the blue ascending trend line, it becomes a supply roof to it. So we'll sell down. This is what makes trading very dynamic. It is not for illiterates. You must be well reasonable, you must be very patient, and above all, you must be spiritual. So now we have an ascending trend line. Our ascending trend line will be watched after price tapping into it on Thursday, tapping into it. The first return here was on Monday, and price returns here on Wednesday. And at the same time, market has opted after touch on that level. I will be watching that level. That level is very important to us to keep our bullish bias intact because a breakout from that structure will be a take of a buy liquidity. Now you see the market has built a buy liquidity on the ascending trend line. If it draws it down and take it down, it takes all the buy idea and turn it to a seller. So at this point, we must be careful of a liquidity sweep because the market has already formed a buy liquidity. So on that buy liquidity, it reserves the right to take it. Now you see on the ascending bullish channel on 4 hours time frame, price have already updated the roof. There is an update of the roof. The roof has been updated. So after updating the roof, it makes sense on technical to expect that market may begin to see some form of correction after price tapping into a supply roof. The supply roof structure is very evident and clear. Price updating here as a supply roof, updating here as a supply roof, updating here as another supply roof, so updating here again, and finally returns in this zone on double confluence, where an ascending trend line meets another ascending trend line, a previous demand floor broken becomes a supply roof, price come here to retest, after retest one, price come here, retest two. So we have our ascending trend line on double confluence, indicating that good buying might be paused based on the structure of the market. So this is what we see. This is what we see. As much as we want the trend to continue buying, but the structure is saying that price has updated the roof. And this is not just the only weakness. This is not just the only weakness. I want to provide more weakness that is transparent. So if you are a smart trader and you trade demand and supply, and you feel our analysis is wrong, feel free to come online and tell me what we've done wrong. But if there is nothing, give us a thumbs up. Give us a thumbs up. Give your boy a thumbs up. And I want to say it here, Shabby FS Hub will never reach out to you to manage your account or to help you grow your money. We can never do that nonsense. It's impossible. You are not a prop firm. There are prop firms where smart traders go in and you have access to liquidity. They will never reach out to you, no matter who you are, no matter how much you think you are worth. Shabby FS Hub will never meet you for anything. So I want to say it for record. So please bear this in mind. Shabby FSO will never meet you for anything. I will never tell you to let me manage your account or help you grow your money. That's typical nonsense. That's typical nonsense. Okay? I know a lot of traders do it, it's choice, but here we don't do that. We don't do that here. So we only teaching you our free strategy for reference. So that tomorrow you don't ask what are you doing now. These are silly questions people ask. So you don't ask such stupid questions. That's why you see these charts here all the time. So this is what we have, and on technical you can see price came again to update that structure. A return there to bear witness to that ascending trend line breakout of structure, and price returned there into 2,815. I know by next week, let's keep this thing up and maintain only one line so that we'll catch the body of the 4 hours candle close. Now I see what might really happen is a push more into the structure might be what we